Hi, I'm Kristen King from the Investing Channel, and welcome to IP Go, the show where we take a look at the IPO world past, present, and future. Equity markets have bounced back over the last week, led by technology stocks, with the Nasdaq adding more than 5% and the S&P 500 gaining 3.9%. Both indices are now well above their respective 50-day moving averages. And it's as if the investor angst about interest rates, inflation, and supply chain disruptions seen in September and early October never happened, or at least were completely unwarranted. The rally in the Nasdaq has been positive for IPOs, or should we say the Renaissance IPO ETF, which tracks the performance of an index of the most liquid and newly listed IPOs that are rebalanced every quarter. We can see that both the Nasdaq 100 and the IPO ETF have rallied in this chart that plots the two instruments against each other over the last month. Whether that's a good omen for new issue performance into the year end remains to be seen, but it's unlikely to do the new issues market any harm. Perhaps the biggest talking point of the week was the listing on the NYSE of another ETF, in this case the ProShares Bitcoin Strategy ETF. ETF managers have wanted to list exchange-traded funds that reference the price of Bitcoin and other cryptocurrencies for a long time, but regulators, such as the SEC, had been reluctant to sign off on their applications. The SEC had recently postponed a decision on crypto ETFs until late November. However, the regulator had a sudden change of heart after a submission of data showed that Bitcoin futures markets were sufficiently developed and liquid enough to support an orderly ETF market. The ProShares Bitcoin Strategy ETF started trading at $40.99, traded down to $40.07, and then printed as high as $43.94 on day two. The ETF tracks Bitcoin futures rather than the cryptocurrency itself, but as we can see in this chart, the ETF price appears to track the cash price of Bitcoin fairly closely too. Bitcoin itself touched new all-time highs last week as it broke above the April high of $64,895. There are 4 more Bitcoin-focused ETFs in the pipeline, and more are likely to follow. A company that was rarely out of the headlines a few years ago that finally listed on the NYSE through a merger with the BowX Acquisition Corporation SPAC is WeWork, a provider of flexible office space and co-working facilities that had previously tried to list in October 2019 at a valuation of $47 billion. Backed by Japan's venture cap giant SoftBank, the deal was expected to be one of the highlights of the year. However, the offer unraveled in the space of a few days as investors balked at the terms of the deal and the latitude granted to CEO and founder Adam Neumann, who subsequently left WeWork. Ultimately, SoftBank was forced to write down the company to a value of just $5 billion. The pandemic saw WeWork's customers leave their offices to work from home, a development which called the whole business model into question. The SPAC merger should value WeWork at around $9 billion, but challenges remain. WeWork has made losses of some $5 billion in the last 5 years, which compares to the $1.3 billion in cash that WeWork will have post-merger. So its success will largely depend on just how quickly people return to the office. And there is some good news here because WeWork's September occupancy is thought to have been as high as 60%, which in turn generated revenues of $228 million for the month. That was the 5th straight month of growth for the business. WeWork has also been optimizing its portfolio of locations and reducing its annual rent bill by some $400 million. WeWork will trade under the ticker WE on the New York Stock Exchange. Morgan Stanley got tongues wagging last week when it suggested that Elon Musk could become the world's first trillionaire. Musk is thought to have a paper fortune of $241 billion, much of which is invested in Tesla. However, the electric auto and battery company is not the vehicle that Morgan Stanley believes could boost that fortune further. Morgan Stanley's analyst Adam Jones thinks that SpaceX could become the world's most valuable company. Jones values privately held SpaceX at $200 billion, up sharply from a $100 billion valuation that was attributed to the business at the time of a $755 million private share sale in early October. Elon Musk owns 48% of SpaceX and has previously said that he would IPO the business, which would be rebranded as Starlink after the network of low Earth orbit satellites that company operates, once it's possible to correctly predict cash flows within the business. That won't happen overnight, but the Morgan Stanley research has surely started the countdown as far as IPO investors are concerned. That's all we have time for today, but as usual, make sure you do your due diligence before making any investment decisions.